Studio 88 has, through a private equity partnership with RMB Ventures, grown its retail footprint from 100 stores to almost 500, while at the same time upping its turnover from just under R1 billion to more than R3 billion. Joining us with more on the South African growth story is Dwight Snyman from RMB Ventures and Dwight Snyman, who's CFO at Studio 88. Dwight, thank you so much for joining us this morning.
Thank you for having us.
Now, if we can start off with you, Dwight, tell us a bit about Studio 88. What exactly does it do, and when did this business come to be?
It's an interesting story. Lawrence Winners, our executive chairman, has been a successful entrepreneur, starting a few businesses and sold them. When he was approached in 2001 by two of his ex-employees who wanted to start their own business and needed seed capital, he agreed, thought it would keep him busy while he was on retirement. They opened one store on the corner of Small Street Mall, and it was immediately a success. The business basically is a clothing retailer selling international brands such as Adidas, Nike, Puma, Levi's to predominantly men and in the emerging market. The business grew from 2001 with one store over the years until in 2010 it was almost 100 stores. That is when one of the partners decided that he actually wants to exit.
So Dwight, presumably that's when you and RMB Ventures came onto the scene. When this business first caught your attention, what made it so attractive?
What is interesting is Lawrence and I have had a relationship that actually goes back to the late 1990s. So this isn't the first time that, from a private equity perspective, we've partnered with Lawrence, or I've partnered with Lawrence. So when we got the call, given our prior experiences, we were very happy to take it and started engaging with Lawrence. And what happened was the conversation very quickly morphed from what do we do with this slug of equity that's become available, and it quickly morphed into a situation where we said, all right, well, that's one solution, but what is it that we need to do with the business? What can we do collectively with the business to really broaden its strategic horizons and set it up for the next 10 years of its growth?
And this one question obviously influenced the way in which the deal was structured, because typically private equity deals are characterized by management buyouts, but this wasn't the case. Tell us why and what kind of structure RMB opted for.
Yes, that's quite interesting. Management buyouts has kind of been the staple of the private equity industry, worldwide and also in South Africa. But that has traditionally, or has become more and more formulaic. This is what we would call or style a replacement capital transaction, where a minority stake in a business becomes available, and then for you as the private equity partner to hop on the bus, so to speak, and to partner an existing entrepreneurial management team and or inject yourself into a family business and then take it from where it is up in terms of corporate governance, in terms of structure, and really with the kind of financial muscle that comes with a credentialed financial partner like RMB Ventures, set it up for its next growth phase.
Now, before we talk about how you've helped to set it up for its next growth phase, talk to me a bit more about this replacement capital structure, just how the opportunities for private equity change because of this.
We have done a number of them over the last few years, and what we really like about that style of transacting is it typically avoids the processes which larger MBOs go through, where you sort of shepherded through a bunch of hurdles and gates by an advisor, and it gives you an opportunity to spend time with the management and the current owners of the business, and that gives you an ability, certainly from an RMB Ventures perspective, gives us an ability to bring to bear stuff that we are proud of in terms of our ability to unpack a business model, understand a business model, and maybe project and think forward in terms of how that horizon of the business can be changed, either by bolstering management in terms of resources, which is what we did in this case when we asked Wits to join the studio team, which has been obviously was one of the key ingredients. So that's kind of the thinking. It allows you to differentiate your offering, to differentiate your ability to add value, rather than being one of 10 guys in a process, and the way you win that is you pay more than anyone else.
Okay, so you also mentioned that it allows you to engage more with management teams. Now, in your engagement together, how did you support this business and also position it for success?
I think one of the key things is you have to have an appreciation for the culture of a business like Studio. It is a deeply entrepreneurial business. It's aggressive, it's fierce, it's fast moving. It's not something that you get to tick a whole 100,000 boxes. So with that appreciation and with the depth of relationships that get built, you can marry sort of a pragmatic understanding from the management and from the entrepreneur side around your governance requirements, and you can in turn separate the strategic and the operational domains and let the management team get on and do what they do best, which is buy and sell, clothes.
And Vets, tell us a bit about what exactly has been achieved since RMB Ventures came on board and provided the support.
So obviously there's been dramatic growth since RMB joined the Studio team, growing the business from 100 stores to almost 500, like you said initially, together with turnover and profitability. But I would say the real value that a private equity company like RMB Ventures brings to the party is to ask the right questions, to instigate debate in order to make the right decisions. Obviously, there's more direct benefits as well, such as instant credibility when you negotiate with landlords and creditors, as well as with help with deal making and acquisitions. But it's more the subtleness of asking the right question that I think is adding the right value.
I think just to add on to that, if you ask our executive chairman, Lawrence, he's quoted as saying that it's one of the smarter business decisions that he's made in terms of picking an appropriately aligned private equity partner such as Ventures to join him. And the way he spells it out is he says the confidence that comes with knowing that someone that is aligned and is kind of looking after the big picture stuff in terms of strategy or financial strategy of the business really frees up the entrepreneur to focus on growing the business, expanding the business, positioning the business. And it's that separation of domains, I think, which has worked very well. But I also, I think it's a much more activist style of investing, replacement capital, compared to a traditional management buyout where the trajectory and the glide path, is kind of set up front. This one is much more dynamic. So, we find ourselves chatting to the management team on and off on a weekly basis. It's not a 4 times a year quarterly board meeting where we sit and rehash the last 3 months' numbers. It's a very much more interactive process, which is very rewarding from our perspective. The whole activist element is exciting and rewarding, and hopefully our partners enjoy it as well.
But although, as you said, the trajectory is not set up front, you still have an exit in mind, because that's what private equity is all about. How then will you decide at which point to exit?
I think it's a good question, and one of the key attractions for an RMB Ventures around some of these replacement capital transactions is they typically require longer to mature, and as a captive player rather than a time-constrained fund private equity manager, that positions us well. We're able to hold assets for significantly longer periods than potentially a fund which has got a opening date, closing date, and is on a little bit of a treadmill. So we like that. Time is the enemy of returns generally, but when the business is growing, then time is your friend. So we're not in any hurry. The exit discussion is had up front, and you establish congruence with the management of the business that this business at some stage, will be sold. But then it's around developing the business, and we'll collectively come to a decision when it's ready. I must tell you, we've had a number of approaches over the last, we've been in the business now for 5 years. We've had a number of approaches. No one's been ready. The partnership is working well. The numbers are positive. So we'll know. The phone will ring, and then we'll find the right home for the business. It's also important. It's not something that you just package up and push down the river. You've got to find the right home for the business. Management will be integrally involved in that conversation.
In finding that right home for the business, what kind of structures would you put in place now to ensure its success beyond a partnership with RMB Ventures?
I think that's already established. The business has grown from a large privately held business to very large, but much more corporatized business. We've got systems set up. The systems environment is very strong. The control environment is very strong. There's no doubt that a corporate home could be found for the business, and that any astute, credentialed corporate buyer would be able to go through and with real ease get through a due diligence of the business. It would pass a due diligence very, very comfortably.
Dwight's certainly bullish on the future of this business. From your perspective, from a Studio 88 perspective, what's next?
I think expansion growth is in our DNA. We will continue to look for new opportunities, whether that is additional storefronts that we can roll out, new territories to go into, and even expansion cross-border.
Maybe to add to that, in terms of setting out on the strategic journey 5 odd years ago, one of the key things we came up with was we decided to avoid introducing any leverage, any third-party debt into the transaction, which generally is a staple of management buyouts and private equity. And we did that because the plan and the glide path was one of growth. And so, for growth you need oxygen, you need a little bit of headroom. And I think that has been one of the key successes and has differentiated the studio retail investment from some other, private equity retail investments where leverage was introduced and, where that's caused a lot of stress.
That's where we're going to leave it. Thank you for joining us, Wiets. Dwight, that's Dwight Snyman, who's a senior principal at RMB Ventures, and Wiets Veen, who's CFO at Studio 88.
Thank you very much.
Thank you.
Thank you so much.